Welcome to Earnings Central. In this video, we'll break down DraftKings' third quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. Let's get started. Starting with top-line revenue, the original estimate for Q1 was $1.11 billion. The company actually reported revenue of $1.1 billion, missing expectations by less than 1%. This quarterly revenue marked a 39.25% increase compared to the $790 million reported in the same quarter last year. Moving to adjusted earnings per share, or EPS, the original estimate for Q1 was a loss of 41 cents. The company actually reported a loss of 60 cents, missing expectations by 19 cents. This result reflects a slight improvement of 1 cent per share compared to the loss of 61 cents reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. First and foremost, DraftKings continued to see strong growth in their newly acquired online sportsbook and iGaming customers, with a 14% year-over-year increase. This customer growth was achieved while also improving the customer acquisition cost, which was down nearly 20% year-over-year. Another impressive metric was the increase in structural sportsbook hold percentage. The company noted a 500 basis point increase in parlay mix within the NFL, which is a key driver of higher hold. Overall, the promotional reinvestment rate as a percentage of gross gaming revenue improved by 300 basis points year-over-year, despite the higher customer acquisition. This promotional optimization, along with other operational improvements, contributed to a 300 basis point increase in adjusted gross margin, which reached 40% in Q3. DraftKings' management team was clearly focused on driving profitability alongside their growth initiatives. Looking ahead, the company reiterated its fiscal year 2025 adjusted EBITDA guidance range of $900 million to $1 billion. Even more impressive, DraftKings introduced its inaugural fiscal year 2025 revenue guidance, calling for 31% year-over-year growth at the midpoint of the $6.2 billion to $6.6 billion range. This speaks to the company's confidence in their ability to continue scaling the business profitably. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First and foremost, the management team acknowledged that the customer acquisition environment remains strong, but they are taking a cautious approach in their budgeting and planning for fiscal year 2025. This prudent stance reflects their desire to balance growth and profitability in the long run. A major area of focus for DraftKings is the continued improvement of their hold percentage, primarily through product innovation and mix shift. The company highlighted the 500 basis point increase in parlay mix within the NFL, and they expect to see similar opportunities to drive hold improvement in other major sports like the NBA and MLB. Another key insight was the company's efforts to streamline promotional spend for lower-value customer segments. By identifying and optimizing the promotion levels for these customers, DraftKings was able to drive significant adjusted EBITDA improvements without negatively impacting revenue. This suggests there may be further opportunities to enhance profitability through continued refinement of their promotional strategies. Expansion into new markets, such as the recent legalization of online sports betting in Missouri, was also seen as an upside opportunity for DraftKings. The company is closely monitoring the legislative landscape across the country and is poised to capitalize on any new market openings that may arise. Underpinning all of these initiatives is DraftKings' long-term focus on retention, activation, and monetization of their customer base. The management team emphasized that while customer acquisition remains important, their ultimate goal is to build a highly engaged and valuable user base that drives sustainable, profitable growth. Finally, the company expressed confidence in its ability to exceed its prior 2026 revenue targets by 2025, driven by the stronger-than-expected industry growth and market share gains. This speaks to the underlying strength and resilience of DraftKings' business model as they continue to execute on their strategic priorities. In conclusion, DraftKings' Q3 2024 earnings call highlighted the company's ability to drive profitable growth, optimize their operations, and position themselves for long-term success in the rapidly evolving sports betting and iGaming landscape. With a focus on customer acquisition, retention, and product innovation, DraftKings is well-positioned to deliver exceptional value for their shareholders in the years to come. That wraps up our recap of DraftKings' third quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earning Central.